Well. Welcome to episode 4 of Crypto Fire Outpost. The topic today is whether or not 40% CAGR is sustainable, and CAGR stands for compound annual growth rate. So, in my previous episodes, I just gave you a little example of how awesome 40% CAGR is in terms of return and how quickly you can achieve fire if we have a 40% CAGR every year. But the question is, can it sustain that forever? In short, the answer is no, it can't sustain it forever, but I believe it can sustain it for a very long time, and I'm here to show how long I believe it can go for. So the first thing is looking at this Excel spreadsheet. What I did here was start this year, 2024, and Bitcoin is around the price of 60,000 right now. And let's just say there's a 40% CAGR. I'm just doing it indefinitely just to see how far it can go. And so every year, if we start at 60,000, a 40% increase would be a 24,000 increase. So that means the new price would be at the end of the year 84,000, and the total market cap of Bitcoin would be about $1.2 trillion. And I'm basing this off of the total 21 million Bitcoin in existence. And of course, there are lost Bitcoin. Not everything has been mined so far, but I'm just going to base it off of the worst case scenario. Let's just say all 21 million Bitcoin. So that would be the market cap. And so looking down through the years, if we sustain a 40% increase, we will see that, let's just say by year 10 in 2033, Bitcoin would have achieved a market cap of 26 trillion. And looking that there is about 900 trillion in total global assets, and that goes in for real estate, for equities, stock, bonds, just everything that exists as a possible asset. And you can Google this, ChatGPT this, just how many assets are there in the world in terms of real estate, including all the different stuff in the world, right? So let's just say there's 900 trillion. So this is 26 trillion of that. And so that comes out to about 2.8% of all global assets. So I believe that is very realistic. I don't see why global can't gobble up 2.8% of all global assets. And that would put Bitcoin at a price of $1.2 million per coin. And that's just, going 40% increasing. So let's just push it further. Let's just see that by the time we hit 14 years, 4 years later, we would have achieved 100 trillion now, and that's 11.1% of all global assets. Pushing another 3 years here, we reach 300 trillion, if Bitcoin continues to go up 40% a year. So in terms of by 2040, 17 years, if each year it actually achieves a 40% CAGR, it would have gobbled up 33.3% of all global assets, right? So that's whether or not that's possible or not, or realistic. I believe it is possible. I believe 33% is possible. Probably more bullish people will say like, oh no, it can even gobble up even more than that, right? And now we're getting in beyond it, right? So currently we're at 900 trillion, and then we exceed that. So at a certain point, it can't sustain this type of rate. But this is just a demonstration. So this is as if it were at 40%. But now let's just see whether or not Michael Saylor, if you're in the space, Michael Saylor is definitely one of the top people I would say you should listen to, and to listen to his podcast, listen to what his interviews and what he says. And I want to share what he predicts here. So Michael Saylor, and he's the now chairman of the company MicroStrategy. He used to be CEO, but he is stating that Bitcoin would reach 13 million per coin by 2045. Okay, so that's what he predicts it will be. So let's just look at, and I built a model around that just to see what that would be like. So going back to the Saylor model, by 2045, I put here 2044, by the end of 2024, you would have reached 13 million. And so based upon this, I had to adjust the CAGR. I had to adjust it that it was 40% for the first 7 years, 35 for the next 3 years, 30% for the next 3 years, 25% next 3 years, 20% the next 3 years, and then drops to 15. If it follows this schedule, then it will be at $13 million per Bitcoin, and that will be at about a $300 trillion market cap. So I think that's what Michael Saylor is saying, is that it will, by 2045, it would have potentially eaten into all the other assets globally. right? And be a third of almost all global assets of the energy there. So I kind of like this model. I'm just going to use this, whether or not I can sustain 40 all the way. If I look at the previous model, if it can go 40% for the full 17 years to get there sooner, or take a little bit longer to get there in terms of Saylor's model. But I'll take this moving forward for calculations in terms of using it for fire. So I'll use that in the next episode just to show you uh, how quickly you can achieve fire on a lot less money than you think, right? A lot of people think, oh, I need to be in the 7 digits to fire off of to have a nice financial independence model set up, and that's just not the case. And I'll show that in the next model. But having going and talking about this, I wanted to also point out another thing is that these numbers are all based upon current dollars. That's if we're not inflating our current dollars in the world, right? And I'm not just talking about the United States, I'm also talking about every other country in the world. In the United States, though, I remember that when I was a kid, back in 1991, I could go to a store called Thrifty, and it was bought over by Rite Aid, and they would sell these one scoop cones for 25 cents. I remember it because I'd come in with a quarter, and Dad, drop me off, and uh, and I'd be so ecstatic to be able to buy a cone, one scoop, for 25 cents in 1991. Now, Rite Aid sells the same scoop of ice cream for $4.25. I actually believe back then 25 cents included the tax. This doesn't include the tax. This would be additional tax on top of it. But anyway, I just modeled it after. I was saying what rate was it actually growing at in order to reach from 1991 to 2024 that $4, that $4 price, right? $4.25 price. And from this calculation, it looks like it basically inflated 9% every year. And the government tells us, oh, inflation's at 2%. No, the average inflation we're aiming for is 2%. I'm just going off of something that's not government subsidized. Like if you do gas and stuff or anything else that could potentially be subsidized by the government, that would be a lot less, right? But look at this ice cream. I mean, it went up 9% every single year just on this ice cream. So the 2% inflation is not the case. And I want to make the case later that it's inflating even faster now. This was just the past of what it was inflating at 9%. And I just took something that could be influenced by something else I remembered when I was a kid. I remember that the bridge toll back then where I lived, it used to be $1 in 1991, and then now it's $7. And this is something that can actually be controlled by the government, right? The government can subsidize this, but even looking at this, I looked at, okay, what to reach $7 in 2024, potentially what was the inflation rate every year to achieve that? And it was an average of 7%. So looking between these two, ice cream and and the bridge model, I mean, you can know that it's inflating a lot more than 2%, right? And salaries are not keeping up with this number. I don't think anybody in the real world, if you were to ask them, are things getting more expensive? More expensive? Do you feel things are becoming more unaffordable? I think almost everyone I've talked to said yes. Everyone agrees. Everything's becoming more expensive, not just more expensive, but more unaffordable. You're getting a lot less for the money you're earning nowadays, right? Reflectively compared to the past. So looking at the M2 money supply, and this is a fancy term. There's things called like M0, M1, M2. This is what it stands for. The M2 money supply is all the money in the U.S. that includes savings accounts, money market funds, and other time deposits. But this is how much money is essentially existing, right? And the money supply in 1990 was 3.5 trillion US dollars. And a decade later, it was at 4.7, and a decade later, it was 8.5, decade later is 15, and then now 6 years, not even a full decade, sorry, 4 years coming in, we're already at 21. So looking at the difference from the previous year, if I were to take, like, just say 2000, the decade between 1990 and 2000, the difference was 1.2 trillion relative to 135. It was a 34% increase. And then the next decade, we went from 4.7 to 8.5. That was an 81% increase. And then the next decade, we went up to 76% increase. And now we're only 4 years into this decade, and we're already at 40%. Only 4 years in. We're not even halfway through yet. So the question is that, I mean, the inflation rate of how much money is being introduced at the M2 level is already almost doubling this entire time. And this is the US model. I would imagine some other countries, of course, some other countries are extreme, right? I think we have obviously like Zimbabwe, all these places are hyperinflated. They're introducing it at a much higher, like multiple, like 1,000% levels, right? But other countries, I would imagine, would have to at least keep up with the US dollar inflation, if not do more, right? So other countries would be the number would be greater for other countries, but they would have to keep on par just to keep trade equal. But let's not get into that too much. But my point is that all these 40% numbers that you're looking at before, these were all based in today's dollars. But as we can see that very quickly within a decade, it might double, potentially even 100%, maybe even more. It might exceed 100%, maybe 120%, maybe even more than that. And so as we go further into the future, if the money supply increases at a at a rate this high, I can only imagine that, being worth 300 trillion out of, instead of right now 900 trillion, this whole bucket might double, might triple. I mean, everything might go up in terms of, of asset value. So I would be, this may end up only being actually 15%, and we actually reach in 2040, that time, global assets may be much higher than 900 trillion. And so this, instead of being 33.3% in today's dollars, might only be like under 20%, 50%. So reaching this number may be realistic, this 300 trillion. And that falls into Michael Saylor's view here also, right? The 300 trillion, right? Anyway, so is 40% sustainable? I think, yes, it's possible for the next 17 years. In Saylor's model, it looks like it's sustainable for the next seven years or so, let's just say for the remainder of this decade, for at least until 2030. And then it starts dropping off to 35, maybe 30, and going there to reach what his prediction is. But using this model, even if we don't keep 40 going forever, even if we were to take this, I'm going to call it the Michael Saylor. So in future episodes, if you ever hear me say it, the Michael Saylor model, you'll see that even using this model is crazy in terms of using it for FIRE, and how awesome it can be to achieve financial independence much, much quicker than any of the other people are talking about on the interwebs here. So, well, I hope you enjoyed it, and I'll see you next time. Be well.